You can have a win rate of 25% and make billions of dollars. If you're getting a 10-to-1 payout, like on a big trend position, and you're getting a win rate of 25%, that's $1 billion stuff right there, right? So stop talking about the win rate. The win rate, like most scalping bots are going to win between 66% to 85%, depending on the day, right? So they're going to win more than they lose. Typically, it's 2 out of 3 to 4 out of 5. That's normal, right? But again, if the risk to reward ratio and the trade frequency and your ability to go through a little rough patch, right? That's far more important, right? Casinos have billions of dollars in reserves. They already know this.
And
Stop trying to.
Let me touch on. I'm sorry for cutting off. Let me touch on this too. The reason why Brian keeps reverting back and using gambling analogies is because once you start over leveraging and once you start taking the basic rules away, or at least from what TruTrade is for, trading automation, once you start taking over that and over leveraging and over trading, that you go from being a trader to a gambler.
Exactly.
That's why he's using that. We're not trying to say that gambling's the same as trading, but what we're trying to say is by over leveraging, by abusing the automation or abusing trading in general, which is what 99% of the people do, that's gambling.
Not the new traders.
That's gambling. We don't want you to do that. We want you to be effective, and we need you to master your own feelings, which is why you're buying automation in the first place.
Right, to detach yourself.
But the majority of the new traders are not detaching themselves. They still have those bad habits. And we just really like you guys to dial it back and trade to your account level. So if you have a $10,000 prop account, if you're trading a real brokerage account, trade what that account represents. So if you're trading a $10,000, you shouldn't be trading more than a one lot. That's it. For every $10,000, respectfully, maybe $7,500 or $10,000, you trade a one lot. You have $15,000, $17,000 in your account, trade two lot. You have $25,000, $30,000, trade a three lot. That's trading where you can absorb, like Brian was explaining here, you can absorb those losses and trade without feeling and let the strategies work their way out. You're not going to win every single time. And let me touch on this too. The smaller the time frame that you trade, or the smaller the brick size that you utilize, the more strict that you need to be in your risk management, because you're taking small portions of the market. If you zoom out, you wouldn't be able to see the price oscillate on your chart because you're trading in such a small space, right? So the smaller space that you trade in, the more stringent that you need to be on your position management.
That's because there's more noise,
right?